The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, or good morning, excuse me. Welcome to today's webinar, 2016 New York State Budget Part 2. We have a whole cadre of presenters here for you today. My name is Matthew Darius. I'm the Professional Development Coordinator here at NYSASBO, and I'll be moderating today's call. We want to do a little bit of housekeeping before we get started. We are going to ask that if you have any questions at any time today to email Kim Shannon. Her email address is Shannon, that's KSHANNON at NYSASBO.org. I won't type that into the chat screen. Please do not use the questions window. We like all your questions to be emailed to Kim. Again, it's Shannon, KSHANNON at NYSASBO.org. That way we can vet the questions and make sure they're assigned to the appropriate speakers. With that out of the way, I'm going to turn it over to Deborah Cunningham. Deborah?
Thank you, Matt. Good morning, everybody, and welcome to this 2016 State Budget Update Part 2. It's going to include changes in the budget related to school tax relief, minimum wage, and paid family leave in particular, hosted by the New York State Association of School Business Officials. I am Deborah Cunningham, New York State ASBO Director of Education and Research, and I am joined by three distinguished guest presenters today. Kevin Bishop is Assistant Counsel to the Governor for Special Projects, and he will be speaking on paid family leave and minimum wage. And we'll be joined by David Cirillo, who is Assistant Director of Personnel and Labor Relations at OCM BOCES, who will talk about the practical implications of paid family leave and minimum wage, and we'll also field questions on those topics. And in addition, we have Tim Marr, Director of Real Property Tax Services for the New York State Department of Taxation and Finance, who will speak on changes in the budget related to the school tax relief program. So today we're going to quickly go over some state-aided programs, including Community Schools Aid, look at the impact of the budget on school districts, spend most of our time talking about paid family leave or paid medical leave, minimum wage, STAR, and with a few additional details on charter schools and grants that are made available related to P-12 education, and then what's not included in the budget that is important to New York State ASBO, and guide you to some key references that for further follow-up and further detail. So the budget this year provided a $1.4 billion increase, 6.1% change over the prior year. This included a $627 million in increase in state foundation aid, including of this $627 million, $100 million set aside as community schools aid. About $434 million was provided to fully eliminate the GEA, and this was an interesting dynamic because we had two very different formulas in foundation aid and GEA. The GEA went mostly to average and low need school districts, while foundation aid went mostly to high need school districts. So there were some distributional effects, and districts got both GEA and foundation aid, or only one of them, depending on how the formulas worked. Expense-based aids were fully funded at $342 million, and I would note that looking at foundation aid, we've been tracking the amount of money that would be required for full implementation of the formula enacted in 2007, but never fully implemented, and that amount now is $3.8 billion is remaining for full implementation of foundation aid, with $2.9 billion of that due to high-need school districts. And we have a great deal more details about these different aided programs, which are included in our Budget Update Part 1, and at the end of the presentation, under References, you will see a link to that information. Okay. Community Schools Aid, this is a set-aside within foundation aid, and it provides funding for 225 school districts. The amounts were from the governor's budget proposal, and the funds will be used for transformation of school buildings into community hubs to deliver academic, health, mental health, nutrition, counseling, legal, or other services to students and their families, or to support other costs incurred to maximize student academic achievement. Now, this program has raised a lot of questions, and we've been exploring many of those. And I would like to thank all of our members who have contributed good questions. These questions have been shared both with the Governor's Office and the State Education Department. We have learned that the funds went to high-need school districts, either on the list from 2008 or 2003, and all the high-need school districts got this money. The allocations cover districts in all regions of the state, and 65% of the districts have under 1,500 students. The per pupil awards have been equalized as they range from under $27 to just over $469 per pupil. And most of the awards were upstate in the Mohawk Valley, North Country, Southern Tier, and Western regions. The department is working on guidance, and I have been talking to them about that, giving them questions. Our two biggest questions are whether the money can be used to supplant existing district expenditures, and how the requirements for reporting on the money, how to account for the money. Should it be in the general fund or the special aid fund like a grant? I don't have definitive answers, but I am informed that complete supplantation is unlikely, but some flexibility will be provided, and we're waiting on definitive answers, and we'll share those as soon as we can. We have asked that the department conduct a webinar when we have this information available so we can get the word out to folks. These next two slides just list the districts that got the funds and the amounts. So looking at the impact on the budget, we looked at the impact of total aid, the GEA, and foundation aid. Looking at the total aid increase per pupil, we see that the greatest aid increases went to the big four city school districts and the high-need rural school districts. Looking at total aid increase per pupil by region, we see that school districts in the Finger Lakes region received the most aid per pupil, and Long Island and Hudson regions the least. The legislature restored or fully eliminated the GEA with two separate appropriations, one called GEA Restoration, which is the blue line, and the other called GEA Final Payment, which is the orange line. And you can see that the GEA Final Payment went to low and average need districts, and that the restoration went mostly to average need school districts, New York City, and then low need school districts to some extent. You're looking at distribution of the GEA by region, and these are total GEA dollars that add up to the $434 million, by the way. The other charts we're looking at money per pupil. So the GEA Final Payment went mostly to Long Island and Hudson region, and the GEA Restoration went mostly to Long Island, New York City, and the Hudson regions. When we examined foundation aid, we looked at total foundation aid per pupil, which is the blue line, and then we looked at, well, how much is still owed to school districts for full implementation of the formula that was enacted in 2007. That's the orange line. And we found that the 2016 enacted budget gave the most foundation aid per pupil to the big four city school districts and the rural high-need school districts. And foundation aid per pupil still due for full phase-in of the formula would go mostly to high-need urban suburban school districts and the big four city school districts. From a regional perspective, the most foundation aid per pupil went to the North Country, and the least to Hudson and Long Island regions. and then foundation aid per pupil for full phase-in of the formula would go mostly to Long Island and New York City regions. So now let's turn to paid family leave, and I'm going to introduce Kevin Bishop. Kevin, who does this apply to, and how does it work?
Okay. Good morning, everyone. Again, this is Kevin Bishop. I do want to start by saying, the bill has been passed, and we are now working on regulations and the outreach and the education, and so a lot of I will provide as much information as we have at the moment. I think there will probably be a lot of specific questions, and I will address those as best I can. But until the regulations are drafted, nothing's set in stone, and I know where we're headed in a top line, broad sense, and I will go from there. So family leave will affect all private employers. So any private employer is covered by the plan. The general outline is that if an employee is employed for 26 weeks or 175 days, they would be covered. Employees that are covered would be part-time workers. Minors are eligible. The self-employed can opt in if they'd like to. And what we're targeting is that the benefits would begin in January of 2018. And there's a 4-year phase-in. This is to give employers time to adapt and adjust to the program. The program is funded by the employees. There's a weekly premium that's deducted. And to get everybody, to allow the employers to ramp up and get ready, in the first year of the program, it's 8 weeks of benefits at 50% of the average weekly wage of the employee, and there's a cap of 50% of the state average weekly wage. So in the first year, again, it's 8 weeks with the 50% of the employee's salary with a cap of 50% of the state's average weekly wage. The second and third years both provide 10 weeks of benefits to the employees. The caps are a little different. In the second year, the cap is 55% of the average weekly wage, of the state average weekly wage, I should say. In the third year, it's 10 weeks, and the cap is 60%. And in the fourth year, this is when we're fully phased in, an employee would be eligible for 12 weeks of benefits at 67% of their average weekly wage, with a cap of 67% of the state average weekly wage. So that's where we're headed. 12 weeks at 67% of the average weekly wage of the employee, with a cap of 67% of the state average weekly wage. Just so you know, the state average weekly wage is set every July 1, and that's set by the Department of Labor. And just to give you a ballpark, in 2015, that was just under $1,300 a week. The benefits can be used for, I think the majority of people will use them for bonding with a newborn. If you look at the bill, newborn would also include not just newborn, but newly adopted children or foster children. The benefits can also be used to care for a seriously ill family member, and also when time off is needed due to a family member's active military duty. So those are the 3 big categories where employees would use this: bonding with a child, caring for a seriously ill family member, or when time off is needed for a family member's active military duty. The family members that are covered by this and who you could use this for, would be children. That includes foster children, stepchildren, any other legal wards. Parents, you could take this benefit to take care of parents. That would include biological and adoptive, in-laws, step-parents. It also includes grandparents and grandchildren, spouses and domestic partners. In terms of the one area that I think people should note is that this does not cover siblings. So if you're an employee and looking to take time off to care for a sibling who has a serious illness, the benefit does not apply in that situation. The program itself will be run by the Workers' Comp Board. So they're going to receive the claims, they will validate them, and they will make sure that the program is running smoothly. any employer that's offering TDI, meaning temporary disability insurance, any insurance carrier that's offering TDI to an employer will be required to offer paid family leave. So they're going to be linked. TDI and paid family leave will be linked. And I think those are some of the high-level issues. The employee, you can require an employee to use vacation or personal time or sick leave. We anticipate that people, may choose to use their vacation time if it's more lucrative, if they're getting a better benefit from that. But it can't be required by the employer. So it would be up to the employee to decide if they want to use vacation or personal time and sick leave. And I know that's probably, there are some unique situations, I think, with schools. And that some of those questions will probably be addressed in regulations.
Okay, thank you. David Cirillo,
Yeah.
Do you have any questions that you would pose for Mr. Bishop?
Yeah. Kevin, can you hear me?
Yes, I can.
Okay. There's a couple questions, but first, I know it kind of models like the FMLA Act. In FMLA, you can actually direct how you're going to look at the calendar, whether it's a fiscal calendar, a calendar year, or maybe even a rolling. Is that going to be the same for this type of leave?
Yes, it's I think what you mean by rolling, we're any 52-week period. So an employee is entitled to the benefits, and let's assume we're fully phased in. So in 2021, an employee would be entitled to the 12 weeks out of 52 weeks. I should be clear, that's 12 weeks total. So if you have a child that's born and you take 6 weeks off to bond with the child, and then you have a spouse or a parent that's sick and you take another 6 weeks off to care for them, that is the full amount in that 52-week period. So you don't get family leave for each occurrence of whether it's a birth or family member being sick. You get 12 weeks total out of a 52-week year. Does that address the question?
Yeah. Yeah, I was just wondering if we can look at the calendar the same way we look at our FMLA leave. So, for example, if we look on a January through December calendar year, do we look at the paid family leave the same way, or can we treat them two distinct calendars? Because I don't know if it's tied to FMLA in that sense. It may only be tied in the sense of what the entitlements are.
This is something that will get worked out in regulations. My understanding and my belief is that they will be running concurrent, so that you can look at them on the same calendar year. And the way the bill is drafted, an employer may require that the employee use the FMLA concurrent with the period of paid family leave. For those on the line who aren't familiar with Family Medical Leave Act, that's the federal law. It's a benefit, but it's an unpaid benefit. And really that's about job protection. And there are some differences. The FMLA has a small business carve-out, so if the employer is less than 50 employees, the FMLA does not apply. There's no such carve-out in the New York State Family Leave Program. So we anticipate that they will run, you can run them on the same calendar, and that an employer does have the option of saying that you have to use them concurrently, so that you're not stacking them, so to speak. You'd have to use your time off that's provided by the FMLA, again, which is unpaid, and you'd have to use that at the same time as your family leave, and that'll be spelled out in the regulations.
Okay, thanks. Another follow-up question. You mentioned that the Workers' Comp Board is going to validate these leave requests, if you will.
Mm-hmm.
Does the district then have to pay the employee directly, and then there's a reimbursement process? Or who cuts the check to the employee?
The insurer will be cutting the check. So you'll have, when you have insurance and they're providing TDI, they're also going to provide the paid family leave. So workers' comp, no state agency will be holding those premiums that are collected. They're a pass-through. So there'll be other agencies involved. DFS and SIF have certain roles within the program, but the bulk of this will be, the regulations will be drafted by the Workers' Comp Board. The weekly premium, that'll be set by DFS they're going to set the max. And so once that's determined each year, I think going forward it'll be eventually on a September 1 of each year, they'll set the max rate. That'll be collected, and then the insurers will eventually have the funds and pay that out. So it will not be the responsibility of the schools to do that.
Okay, one more question.
Sure.
Is this an option by individual employee, or it's the entire employee group that's covered under, we'll say, a collective bargaining agreement?
Once the employer is either covered or chooses to opt in when they have the option, so once an employer is part of the program, every employee underneath that employer is covered. So it's not the individual employee does not have a choice once the employer is covered.
Okay, so if some employees choose they don't want it, they have no choice. It's either they're in or they're not.
Correct. The employee doesn't have any option in the matter. Once the employer, in New York State, every private employer is covered. You mentioned union bargaining. Once an employer in that situation chooses to partake in the program, then every employee would then be covered automatically. There's no opting out for the employee.
Okay, and for those school districts who don't offer, like the insurers don't offer the TDI, the only way this option then comes in is if it's collectively bargained. Is that correct?
Correct, yeah.
Okay. All right, that's all the questions I have at this point. Thank you, Kevin.
That's wonderful. Thank you very much. So let's move on to minimum wage. Who is this going to apply to, and how does it work, Kevin?
Deborah, do you mind if I actually cut in with two questions that I just received?
All right, go ahead. Kim Shannon,
I just want to make sure. I know that I believe that this was answered, but I think this is a question on everyone's mind, so I just will ask it again so it's reiterated. Is it correct that schools have the option to participate in this paid family leave program?
For schools that partake in collective bargaining, yes.
Okay. Can you explain again, how does paid family leave intersect with FMLA? If a school district opts in, can an employee have 24 weeks of leave for the birth of a child?
The most under the state program, so New York State's family leave program, the most you can get under any situation within the 52 weeks is 12 weeks once it's fully phased in. And that's where you receive your paid, when it's fully phased in, you're receiving 60% of your salary until you hit the state cap. With FMLA, an employer can choose to make them run concurrently so that you're using the time that you would get under FMLA while you're using your New York State family leave. And then if somebody, if you had more time under FMLA, you would be entitled to that. That's a federal regulation, so we can't minimize that or in any way, restrict that benefit.
If one union wants paid family leave and another doesn't, what happens in that situation? One of the questions we received.
So let me make sure I understand that. So a union covers one school district, and a separate union addressing a separate school district doesn't want to partake. Is that the question?
Yes, I believe that is the question.
Well, I thought it meant, did it mean that there were two bargaining associations within a single school district and representing different employees?
This is the entirety of the question is school districts are not required to provide paid family leave, but we can negotiate it with unions. What if one union wants it and another doesn't? Dave, if you want to jump in at any point to
well, I'm not sure how this law is going to be drafted, but if it's like anything else, a bargaining organization can negotiate for one group and not for another. So even if we'll say bargaining union 1 has 3 different groups in the same school district, they can have all different benefits. So again, I'm not sure how the law is going to be crafted, but I'm assuming that you would negotiate for whatever population is represented under that agreement. So either the employees under that agreement have it and the other ones don't, or not. It's negotiated separately. So Kevin, I'm not sure. Yeah, I'm not sure if that's how it's going to be crafted.
I think that is probably where we're headed. Some of these are issues. One of the reasons I'm here this morning, by phone, is that we've drafted the bill and we're going to have extensive regulations to address a lot of these concerns. So it's important for me to hear them. And but the description that I just heard is, I think, where this will end up. The individual whoever the union is bargaining for, those are the people that would be covered by that decision. So. Schools are a little bit different, I guess, than, normally we think of employers as sort of a collective unit and all the employees have more or less the same benefits. But, yeah, if a school has 3 different unions and they've negotiated 3 different situations for themselves and, 2 of them want to opt in and 1 doesn't, that would be my expectation. Again, that'll be spelled out in regulations, and I can't guarantee one way or the other, but that would be my expectation.
Right, I think that's an important facet of this, because we have some districts that have like 11 or 12 different groups. Some of them are highly compensated employees and some are minimum wage employees, and depending on the group, some may want it, some may not. So hopefully it impacts only the group that's negotiating the agreement, not for the entire district, because that wouldn't make any sense.
I agree with you. It does not. That would not make sense.
Okay, any other questions on paid family leave before we move on? Okay, let's then the minimum wage. Who does this apply to, and what are the important details for this program?
Okay, minimum wage is a little bit more straightforward. I think most people have probably seen the various categories and the phase-in dates and the rates, but I'll go through them. There are 4 categories for minimum wage. There's New York City. And New York City has 2 distinctions. There's large employers and small employers. So in New York City, if you're a large employer, and that's defined as any employer with 11 or more employees, there's a 3-year phase-in. The phase-in rates, currently the minimum wage is $9, and at the end, on December 31 of 2016, for New York City large employers, that'll go up to $11. The following year, December 31, 2017, it'll go up to $13, and on December 31, 2018, it will hit $15. So it's a 3-year phase-in, $11, $13, and $15. New York City small employers, which are 10 or less employees, they have a slightly slower phase-in, so there's a 4-year phase-in. And so currently the minimum wage is $9. At the end of this year, it'll go up to $10.50. $12 the next year, $13.50, and then $15. So it's a 4-year phase-in. The other two categories are the remainder. What's been termed in the bill as remainder of downstate, and essentially that means Long Island and Westchester, so Nassau, Suffolk, and Westchester counties. There's a 6-year phase-in. It goes up by $1 each year starting this year, so December 31, 2016, the minimum wage will increase to $10, and it'll go up by $1 each year thereafter until it hits $15 on December 31, 2021. I guess the trickier one in terms of the numbers is the remainder of the state outside of Long Island, Nassau, and Westchester, and that's what most people would think of as upstate. That has a 5-year phase-in, and this year it starts, we're at $9 currently. It'll go up to $9.70 on December 31 of 2016. Then it goes up to $10.40 on December 31, 2017, $11.10 on December 31, 2018, $11.80 on December 31, 2019, and then it stops at $12.50 on December 31, 2020, and it'll be indexed thereafter. So depending on how the state economy is doing, the minimum wage can go up based on an index. But it stops at $12.50, so the upstate does not reach the $15. I'm not sure if there are any specific questions. The definition of who is covered by the minimum wage was not changed in the bill. I think in practical matters, though, there will probably be employees that traditionally earned well above the minimum wage, and therefore employers, meaning the school districts, perhaps didn't have to do the analysis to figure out if they were covered by minimum wage because it was, safely assumed they were above that threshold. So there may be a group of employees that now would be affected by the minimum wage, but the actual legal definition of who is covered by the minimum wage and who is not covered by the minimum wage was not adjusted or changed in any way.
Okay, yes, I do think we have some questions coming in that I understand Dave is going to digest and put out to you. Dave, are you there?
Yes, I'm here. I was just reading through some of the questions. One of the questions that came in is the October changes, will that be for the following December 31st or the following year?
The December immediately following.
Okay, so that could be a significant impact then. That's kind of short term. All right, so you're talking about the December immediately following that October change.
Correct. Again, this is only for upstate. Every other region of the state has the fixed rates. So it's only upstate that has. It may not change at all upstate. It depends on the index and how the economy is doing.
Okay. I don't think there's any more questions on the minimum wage, but there were some follow-up questions on the family paid leave. Kevin, if you have a moment, I can ask you a couple of those questions.
Absolutely.
What if the scenario is we have some employees who are organized under a collective bargaining agreement, but some are not? What about those employees who are not covered under an agreement? How do they opt in, or can they opt in?
So they're not covered by the agreement, but I guess, I'm not as familiar with the
Right, because what happens, a lot of our school districts, and I'm familiar with most of them, in central New York, most of them are covered under bargaining agreements, but you have a handful of employees, depending on the type of employee, that may not be covered under an agreement for various reasons. One, because they're just not represented, or two, they're confidential employees who can't be covered. So what do you do with those employees?
I have to admit that's an interesting question because the schools are not a private. You're talking about public schools now, right? Correct.
Correct. Public schools only. Correct.
Public schools, but you have a group of employees that are not actually within a bargaining unit, so they're sort of, but they're not consultants or independent contractors. They're actually employed by the school district.
Correct. They're employed by the school district, and they may not be covered. Just simply, they're not represented. They're not organized, or in some cases, they may be confidential, managerial, and they're not under a collective agreement.
I think that's the one I'm going to have to, I don't know. We will have to, I think we will work with the various stakeholders, meaning, you guys in particular, to see how, what works best and what makes the most sense. I mean, my thought would be that I guess the school district would then make that decision. But it's a bit unusual because it's not it's some sort of gray area that is not specifically addressed by the legislation. It's something we'll have to flesh out in regulations.
Okay, thanks. And one more follow-up, I think, for the paid leave. You mentioned that it's the insurance company that would be paying the paid leave days. What if the school district is self-insured? Then does the district then pay the obligation?
Well, to be clear, I mean, the employees, always putting, there's a deduction on a weekly basis from the employee's salary. So ultimately, the employee is always paying. The question, it's more about the mechanism to make sure that the employee gets reimbursed. Now, if the school is self-insured, they can participate in the program. If they want to self-insure, they can apply to the workers' comp board to make sure that the program that they're providing is equivalent to or better than the paid family leave program, and then it would, they would be granted approval if it is. And nothing in the law prevents an employer who provides a more generous benefit from continuing to provide that benefit. So, for instance, If there's an employer that provides 12 weeks of paid leave at full pay, then what we're doing is setting a floor. We're not setting a ceiling. And in that situation, the employer could continue to provide the benefit at a richer level if they want to do that.
Okay, thank you.
You're welcome.
Any other questions on paid family leave or minimum wage? Okay, well, thank you very much, and I just want to comment that we really appreciate this conversation and engaging these questions with our members, and we would be totally happy going forward to continue this conversation and to react to draft regulations, et cetera, and just uncover these sort of gray areas where it may not be totally clear. So thank you very much, both of you, for your good presentation and the great questions. So we'll move on to STAR, the School Tax Relief Program, and we have with us Tim Marr, who's the Director of Real Property Tax Services at Tax and Finance. So welcome, Tim. Tell us about the changes and the implications for school districts.
Good morning, and thank you for the opportunity to discuss the changes to the STAR program. The enacted 2016 budget includes a provision that will gradually transition the STAR property tax exemption program into a STAR check program. I thank you for the opportunity to speak to this group. Right now, we're currently working on updating our website, creating some FAQs that we'll post on our website, updating our pamphlets. But in general, what the program is going to do is that what's been historically a property tax exemption on your school tax bill, when the property transfers, it will be a check each year from the state tax department, which will be an equal benefit to the benefit that you would have received if you had the property tax exemption. So, for example, myself, I've lived in my home for 15 years. I've been receiving the STAR exemption for 15 years. I will continue to receive an exemption every year as long as I own my house. My neighbor, who just purchased this home last year, this year he will receive a check from the tax department. The benefit will be the same. I will, on my school tax bill, my school tax bill this year will be $3,000, and my tax bill will say I received a STAR exemption benefit of $500. My neighbor, who just purchased his home last year, he will receive in September a higher tax bill of, in this case, $3,500, and then he'll get a check from the tax department of $500. So ultimately, the benefit we each receive is the same, and the taxes we end up paying is the same. And this is going to gradually happen over time. As long as I keep my home, I get to keep the exemption. If I switch from a basic STAR exemption to an enhanced STAR exemption for seniors, I keep the exemption. If I happen to start getting the enhanced STAR exemption and I switch back to basic, I'll continue to get the exemption. But when I sell my home, the person who buys it will not be in the exemption program. They'll be in the check program. Now, this goes into effect immediately. The eligibility requirements for STAR are staying the same. It must be your primary residence, and to receive basic STAR, your income can't exceed $500,000. The benefit, as I said, will be the same. If you receive the STAR exemption on the 2015 school levy, based on your application, you'll continue to receive the exemption. So I applied for STAR 15 years ago. When I purchased my home, I stay in the STAR exemption program. Right now, we've been working, since the law was enacted, we started working with the assessors because they obviously have to help us identify these people who need to come in and register this year with us. Again, these are folks who purchased their homes since the taxable status date for last year's school levy. So we're working with assessors to help them identify who they need to send letters to say, this year you can't get the STAR exemption on your tax bill, but register with the tax department, you get a check directly from the tax department. So we've been meeting with them on a pretty regular basis since April 1, and they're coming up with process together. We're coming up with a process they can identify these folks. Okay. The tax department's developing a registration app, similar to the one a couple of years ago where you go into our website, you enter information about your property, you enter information about the owners of the property, you certify that it's your primary residence, you give us your social security number, and we can use that information to send you a check for the appropriate amount. Homeowners will also have the option to call us. If for whatever reason they don't want to register over the web, they can call us and we'll register them over the phone. The plan is that if they register by July 1st this year, they'll get a check in September for the schools that levy in September or earlier. Obviously, if you're in Suffolk County, the check would then go out in December, or Nassau County, the checks would go out in October. But for the typical school district in New York State, register by July 1, we'll get your check out by September, by the end of September. If you don't register by July 1, you'll still get a check, you just won't get it in the month of September. Now, related to this, on the
Tim, this is Deborah Cunningham, and I do have a question.
Okay.
It's the new homeowners that will receive this check rather than the STAR exemption. But if you never move, will you always continue to receive the STAR exemption?
As long as you received the STAR exemption last year based on your application, you'll continue to receive the exemption. So again, in my case, I've been receiving the STAR exemption for 15 years. As long as I own my house, I'll always stay in the exemption program. Once I sell my house, the person who buys the house will not be eligible for the exemption. They'll be eligible for a check each year from the tax department.
Okay, all right, thank you.
Okay. So in addition to this, the legislation contains information that has to go on the tax bill. So right now, if you're getting the property tax exemption, there's language that says you're receiving a STAR benefit of X dollars. So for example, my tax bill every year says I'm receiving a STAR savings of $500. With the new program, the tax bill is going to have to be modified to say, for example, for my neighbor who's getting a check for $500, to say on my neighbor's tax bill, you'll be receiving a check from the state for $500. So there's going to be need for the tax bill preparers for the school district to modify their tax bill preparation to account for this difference. So what's going to happen is by August 1 of this year, we'll be sending out, we'll make available files of here are the 200 people in your district, here are the properties that are going to be getting a STAR check from the department. And there'll be a method, we're working with our RPS system, we're working with assessors and county directors of real property tax services to make a way that the file that you end up levying your tax on has an indicator that will say, yes, this property is getting a check from the tax department this year. Similar to right now, the file you have has an exemption code, and your vendors key off that exemption code to say, yes, you're getting a STAR tax savings through the property tax exemption program of X amount. There'll be another indicator that says, okay, you're getting a STAR check from the state for X amount. So that's the basics of that. And then every year we'd be sending out, we'd make available a list of who in your district is getting a check. And you'd have that language on your tax bill. So just wanted to, one of the questions we received so far is how does this relate to the property tax relief check that was in last year's budget? This is in addition to that. So the property tax relief check, which is going to everyone in your district, as long as your school district complies with the property tax cap, they'll all be getting a property tax relief check. The new homeowners will also be getting a STAR check. So those folks will get two checks. Typical homeowners who've been getting the exemption for years will get just the property tax relief check, which is a fixed dollar amount this September.
Tim, I have some questions. How new does a homeowner have to be considered to be considered a new homeowner? In other words, what's the date of purchase that would consider you a new homeowner?
It's tied to, did you receive the exemption last year based on your own application? So as you know, different school districts have different deadlines. In the typical upstate district, the deadline for receiving a STAR exemption is you have to apply by March 1st. So, and again, a typical upstate school district, if a homeowner applied for STAR on or after March 2nd of 2015, they will need to register with the state to get a check. So if they had applied March 1 of 2015 or earlier, they received the exemption last year and they can stay in the exemption program. But March 2nd, 2015 or after, that's when they filed their application. This September would have been the first time they're getting the exemption based on their own application, so those folks will be notified by their assessor. They're not getting the exemption this year, but you need to come to the tax department website, register with us, and then we'll send you a check for the same benefit you would have received.
And on that note, Tim, how is New York State communicating these changes to new homeowners?
We're going to be the first thing that happens is these folks have already applied to their assessor. So the direct way is we're having the assessors send letters to these homeowners who need to register. And the law provides that the tax department will supply wording for that letter. And through our RPS system, real property system, that 95% of local governments use, we'll be putting coding in that system that will allow them to hit a button and produce the letters and to send those letters out. In the future, we'll be working with attorneys, realtors, to make it part of the closing. That we see in the future what would happen is you come to a closing, and right now when you close on real estate, there's often a paper application to file for the STAR exemption. There'd be a pamphlet included that would provide you with instructions. You need to go out to the tax department website and register online, or you can call us and we'll register over the phone. So that's the long-term process, that as part of the closing, you get information about how you get the STAR benefit, and the way you get it is by registering online or calling us up. The majority of people who are still living in their homes this year, roughly maybe 3% of properties transfer in a year. So the vast majority of homeowners are not affected by this change this year. It's only when they sell their house, in which case they don't own the house anymore. It's the new buyer who, going forward, will not be getting a property tax exemption. They'll just be getting a check each year, and hopefully it'll be transparent to them. They've never received an exemption, so it's a new check program.
Okay, and this one, I believe that you've talked about a bit, but I do want to ask it again because I think that this is the biggest question that we received. The discussion makes it sound like New York State will be issuing checks instead of a credit on the New York State income taxes filed. Is that accurate? Yes,
we'll be sending out checks. The original proposal talked about being an income tax credit on your income taxes, but as part of the negotiation between the Senate, the Assembly, and the governor's people, it was determined that it would be a check program sent out as soon as possible in the same time frame as when people were getting their tax bills. So again, back to my earlier example, when I get my tax bill this September, it'll have a reduced amount because I'm getting the STAR exemption. My neighbor who purchased this home last year will get a tax bill in September, and then we'll get a check in September. So the net that I have to pay will equal the same net difference for my neighbor. And then every year, you get a check every September. That's my neighbor.
Okay, I just wanted to jump in and ask, can you explain why the state is switching to this check system versus the STAR exemption? What are the benefits to the state of doing this?
The STAR program is the one benefit that's a state benefit. All your other exemptions, obviously, senior citizens, veteran, firefighter, those are all paid for locally. The STAR exemption is the one benefit that comes from the state funds. So the state, it's been determined based on negotiation between the Senate, the Assembly, and the governor that this is the appropriate way to deliver this benefit is through a check directly from the state. One of the other benefits is that we can ensure in the future that folks aren't receiving multiple benefits, not receiving a STAR exemption in Town A and also in Town B. We'll have all the data in one spot that we can say, okay, you've already claimed your primary residence as being in School District A, Town X, and now you're trying to claim it in another town. So it will reduce that also.
Tim, how does the exemption work if a person goes from STAR to Senior STAR?
As long as you're in the exemption program, you get to keep the exemption. So if you've been getting basic and then you hit the right age and your income is below the income limit, you can continue to receive the exemption will be an enhanced senior exemption. And then let's say a few years down the road, your income increases, you could fall back to the basic STAR exemption, because as you may know, with the enhanced STAR senior exemption, there's an income limit that changes every year, so there's a possibility that you might go from enhanced back to basic, back to enhanced. As long as you're in the exemption program, you'll stay in the exemption program. If you come and register with the state, and we'll have information about your age and your income, when you hit the appropriate age and if your income's below the limit, we'll send you a bigger check that's the enhanced check amount, and then if the following year your income goes up and you're not eligible for the enhanced, we'd send you the basic star check.
Okay, and forgive me if you've already said this, I was reading through questions at the time. Do we know the date for when the checks will be mailed?
The law talks about if we get registration information from the homeowner by July 1, the checks will go out by September 30th. So that's our plan, that's our goal right now, is to, what we're working on right now with the assessment community is identifying those folks who need to register. Then we'll be sending out a letter to those people. They'll be coming in and register either over the phone or via the web by July 1. And then by August 1, we notify the school districts, here are the properties and people in your district who will be getting a check from us. The school district will then update their tax bills to reflect that, and then we'll be sending a check out to those homeowners in the month of September.
And do new homeowners receiving a STAR check have to apply to get a refund from the state every year, or just once?
It's just a one-time registration. Once you register, we will continue to review your data each year and then send you a check each September. And then, so you'll be in the check program, and then when you sell your home, the new buyer will have to come in and register, then we'll send them a check. So again, this will be over time. This will take quite a while, because as long as you're in your house and you've been receiving the STAR exemption, you'll continue to receive the exemption. It'll just be the folks who purchase your home who then have to register and get the check.
Great, thank you very much. Kim, do we have any more questions?
We had so many questions during this presentation, and we have asked the most commonly asked ones right now. If there were any further questions, we will send that information out insofar as we know it. But so there were more questions, but nothing that I can identify right now.
Okay, I just wanted to comment on that. We will be sharing all of the questions with each of these presenters so that they are aware of the full range of it. And we'll be looking at them in detail, and if we need to research any to get an answer, we will put that on our work list and make sure that we get answers back to all the participants of the webinar. So thank you. And let's move on. I just wanted to comment that there were some changes related to school safety in the budget. The budget did continue the 10% building aid enhancement for school safety, so that's still there. And there is safety training that's required for all new hires within 30 days of hire. 12 evacuation drills will be required during the school year, 8 of which by December 31st, and 4 of which must be lockdown drills. And then there's a requirement for one building districts that they must develop both district level and building level emergency response plans, but the commissioner will set up a process to streamline that reporting. And then perhaps most importantly, it adds credible threat to student safety as one of the reasons that the commissioner can waive the 180-day requirement and the district receive full state aid. That was a change that happened to give the commissioner that authority, and this is added to those reasons where the commissioner can act and waive that 180-day requirement. There was $54.8 million appropriated for approval by the Senate and the budget director, and we understand this is to support the Senate's charter school agenda, although there will be no changes to the basic and supplemental tuition methodologies, and we provide a link where those rates and methodologies can be found. And the next 3 slides list grants and other appropriations that relate to P12 education. I'm just going to point out a couple of them in the interest of time. There was $22 million appropriated to expand pre-kindergarten for 3-year-olds, And the department's initiative related to My Brother's Keeper, which is a program to improve education outcomes for boys and young men of color, was awarded $18 million appropriation for aid to localities and $2 million for state operations. So, and that will be rolled out by the Education Department over time. Let's see. There were two important things from my viewpoint that happened to the State Education Department's budget. They were given $2 million for a new Office of Family and Community Engagement and $2 million to reestablish an Office of Religious and Independent Schools. I don't know if some of you know that that former office, which is referred to as the non-public school office, had closed down, and the function was being absorbed by the Office of Educational Management Services. So now this money will bring in important funding for the department to increase its staffing, and that will also benefit management services by being able to use their staff to support the public school districts. And the budget also continued the $8.4 million that was provided for assessment to reduce testing time, and $800,000 for the Office of Facilities Planning to reduce the backlog in the approval of school facilities projects. Let's see. So I want to close with some things that are not included in the budget and that we think are important and we'll still be talking to. First of all, there is a connection between having an approved professional review plan consistent with Education Law 3012D and your aid increases for 2015-16 and 16-17. You must have this in place by September 1st of 2016. I think currently there's about 200 districts that have approved plan. That means there's quite a few, maybe 450 districts that don't have it. So I would encourage school districts to negotiate these review plans. We will be talking about this and trying to sever this link between the aid increase and this policy initiative. But for now it is there, and school districts should take that seriously. There also were no adjustments to the property tax cap. The 2015 law provided some additional flexibility with the property tax cap, but those were never implemented, and we had asked that those be put in law definitively and implemented. Prior year adjustments are, I believe the latest number is $325 million, but they were given an allocation of only $18.6 million. So what that means is if you have an approved prior year aid claim now, it may be 20 years before you receive that money. We note that New York State continues to receive settlement funds from bank settlements that they that have occurred, and we think that this is a perfect use of this one-shot revenue for these one-shot expenses. So we're going to be pushing on that. And also, the budget did not commit to a full phase-in of foundation aid, which we think is important. Now that the GEA is fully eliminated, it does turn the attention to foundation aid, and NYSASBO would like to see the governor and the legislature commit to fully funding the formula within a defined period of time. Let's see, I did it too fast. Okay. In addition, there seems to be a great deal of agreement in the education community that additional resources for career and technical education would provide a lot of benefit to students and help the state improve their dropout prevention rate, and this was not included in the budget. The budget didn't include the parental choice and education tax credit, which is a good thing from our point of view, as it it uses tax resources that are important for public education. The receivership law is not changed, but ASBO, together with the Education Conference Board, had recommended some changes, especially that more time be allowed before an independent receiver be brought in. And last but not least, the Uniform School Bond vote day was so that all capital projects will be voted on the same day as the budget, was not approved. So we're pleased with that as well. So I think we are out of time. I would like to thank our presenters, Kevin Bishop, Tim Marr, David Cirillo. Thank you for bringing your expertise and knowledge to this important conversation. And for all of you that have additional questions, please contact us. We will be following up this. This all is a work in progress, as I think some of the presenters have mentioned, and we will be continuing to communicate and gather information on these topics. So thank you and have a great day.